You go to the grocery store, and the exact same items cost 20% more. Your electricity bill is hundreds of dollars higher. The reason your local cost of living is spiking right now actually starts thousands of miles away in the Middle East. Think of the Strait of Hormuz as the main valve for the global economy. At its tightest point, this waterway is only 33 kilometers wide, yet approximately 20 million barrels of oil must pass through it every single day. Iran sits right on the northern bank of this exact choke point. They do not need to defeat American aircraft carriers head-on to cause economic damage. They use cheap, asymmetric tools like drones and naval mines to completely disrupt this route. We can see Iranian military boats actively patrolling mere yards away from massive commercial vessels. The immediate threat to your wallet is not the battlefield outcome of any specific military strike. It is the physical reality that 1/5 of the entire world's oil supply is currently trapped behind a blocked waterway. This chart shows the daily flow of oil through the Strait of Hormuz based on recent Goldman Sachs data. The baseline is normally 20 million barrels a day. Right now, that number has plummeted by more than 90%. Because of this physical bottleneck, roughly 3,000 oil tankers are sitting completely idle. Storage tanks in neighboring nations like Iraq and the UAE are rapidly reaching maximum capacity, forcing them to restrict their own production. To understand the size of this disruption, we have to look at the math. We are staring at a potential supply shock of 17.1 million barrels per day. This is 17 times larger than peak production cuts from Russia during the 2022 conflict. If this physical blockade continues, the missing volume of oil will easily shatter historical price peaks. Even if global governments agree to release their strategic petroleum reserves, those reserves will eventually run dry against a completely closed shipping lane. Surging energy prices act as a hidden tax on the public. Natural gas is the primary raw material for fertilizer, so farming costs immediately jump. Combine that with double the shipping costs for diesel delivery trucks, and those expenses are passed directly onto your supermarket shelves. We have seen exactly what happens when an active conflict severs the global oil supply. In October 1973, an Arab oil embargo caused domestic energy supplies to evaporate, forcing drivers to wait in miles-long lines for gas. The financial damage was severe. The global economy plunged into stagflation, a destructive economic cycle of slowing growth combined with soaring inflation. During that period, the S&P 500 plummeted by nearly 45%. This graph shows the timeline of that market crash. Notice that the true economic devastation did not happen immediately. The peak market crash hit exactly 12 months after the initial supply shock. Current stock market valuations are significantly higher today than they were 50 years ago. Because the market is priced for perfection, the downside risk of this repeating pattern could be much worse if the oil shock sustains itself. The disruption reaches far beyond the Middle East. President Trump recently announced that the United States is completely severing all oil supplies to Cuba. Look at the wider board. Venezuela holds massive oil reserves. Iran controls the Strait of Hormuz. Cuba sits near critical shipping lanes. This is a comprehensive, coordinated effort to control global resources and major shipping corridors. The immediate economic victims of this strategy are in Asia. Nations like Japan, South Korea, and Taiwan import almost 100% of their oil, and the vast majority of it ships directly through the blocked strait. This international pressure is creating a terrifying anomaly on Wall Street. Normally, bonds act as a safe haven when stocks fall, but right now, oil-driven inflation is pushing treasury yields up, which forces bond prices down. Stocks and bonds are falling at the exact same time. With the traditional safety net failing, we are staring straight into a prolonged economic slowdown. Combined with soaring prices, unprepared investors are completely exposed. When a geopolitical crisis hits, wealth does not simply evaporate. It transfers from emotional gamblers who panic to prepared investors who stick to a plan. The absolute worst mistake you can make right now is blindly chasing energy or defense stocks after they have already spiked. If a sudden ceasefire is announced tomorrow, oil prices will collapse, and those specific stocks will violently adjust downward. To survive this, you must hold high cash reserves to maintain a defensive position. Second, you must immediately audit your portfolio to identify and reduce your exposure to vulnerable sectors like travel operators and heavy energy importers. Third, write down strict mathematical trigger conditions to dictate your future trades. Decide exactly what metric will cause you to buy or sell, completely removing your human emotion from the equation. Waiting for the market to actually crash before you figure out your risk management plan is exactly how accounts get wiped out. Systematic discipline is the only way to protect your capital. This is exactly why you need a strict framework to override your psychology. The Stewardship Finance Academy provides the exact tools required to navigate this kind of massive market dislocation. The free masterclass teaches you how to analyze real-time macroeconomic conditions and execute step-by-step risk management. You learn to make decisions based on hard data, not guesswork. Click the link in the description below to secure your spot in the free masterclass before the real economic aftershocks hit the market. I want to hear from you. Exactly what adjustments have you made to your portfolio since this conflict began? Drop your specific strategies in the comments below so we can analyze the data together. If you found this breakdown valuable, hit the like button, subscribe, and share this video with anyone needs to protect their portfolio right now. Stay fiercely disciplined, and I will see you in the next video.